To merge or not to merge, the Australian Securities Exchange says it's still keen, despite last year's attempt to join forces with the Singapore Exchange being knocked back by Canberra. The ASX has lifted half-year earnings by 2% to $176 million, even though equity markets are continuing their post-GFC doldrums. It was the first result since new Chief Executive Elmer Funke Kupper joined from Tabcorp. I spoke with him just after the announcement. Elmer Funke Kupper, welcome to the program.
Thank you.
One of the wags in the office said to me the other day that you've moved from one gambling institution to another. Does it feel like that?
Not really. I mean, it's a comparison that gets regularly made. I have, of course, moved from one regulated industry to another that's going through significant change. So there's some parallels there, but you know, I think it's a very different form of investing rather than gambling.
Notwithstanding that, there has been a big increase in recent times in things like day trading, contracts for difference and other computerised type trading, and even many institutional investors are taking an increasingly short-term view of the market. It looks like gambling. Does that bother you, or are you just happy to sit back and take the trading revenue?
Well, our job is to facilitate investment and trading in whatever regulations are available to us. And the reality is the growth in technology and the change in regulation has allowed this to flourish. We participate in that and we make money out of it. We're okay with that, but we have raised a few warning bells that we have to make sure that those kinds of activities don't ultimately interfere with what the market is for, which is capital formation and bringing back together people who have money with people who need money.
And just on that point, the biggest driver of revenue for the ASX at the moment is growth in derivatives. Are you confident that people are actually using derivatives to lower the risk in the market and not increasing risk by trying to make a quick buck?
If we look at the derivatives growth that we've seen in the first half, a lot of that was driven in the early part of the half when there was a lot of market volatility. And so derivatives are really hedging products, and that was an environment in which those hedging products were used, and so they serve their purpose and we get growth out of that. Now I think it's very healthy.
Your overall revenue was only up by about 2.8%. You must be sweating on some sort of resolution to the Greek crisis to restore confidence to the market.
Well, I think this is right. I think since about September, October, we've really been going down and sideways. And so rather than the first part of the GFC where we saw a V-shaped recovery, we're really in a U right now. And whether we get out of that really depends on whether Europe gets its act together. And I think we're all waiting. I'm not necessarily sweating. But it's very uncertain whether that's going to be resolved anytime soon.
Well, if Europe does drag on, and most people, including yourself, think it will, where do you see growth coming from for the ASX?
Well, I think we're investing in a range of new products and services, and that we'll see is get some growth. At the end of the day, we are dependent on corporate sentiment and market values and volume. So when they're down, we're down. But of course, it will return. The real question is when. What we're doing is making sure that we get good growth for when that sentiment returns, and that's why we're making the investments that we are.
Your predecessor, Robert Elstone, was wedded to the view that the ASX had to join the global wave of consolidation in securities exchanges. Do you share that view?
Well, I think consolidation in the exchange world is not going to stop. Of course, what we've seen is several attempts having failed, including our own attempt with Singapore. But it doesn't mean that the rationale for it goes away necessarily. I'm right now watching it, so there's really nothing to talk about. But I think it will continue, and we need to, as a country, decide whether we want to be part of a bigger world or whether we want to be a client of Asia, living off the growth of someone else.
Is resurrecting the Singapore deal part of your brief?
No, it's not.
Where do you see a deal coming from then?
Well, I don't see a deal at all right now. So my focus is on our organic business plans. But I think we have to be mindful, and I think the comment that I've made to policymakers is that the country needs to make a set of choices about its future, whether we see a region like Asia as a customer or whether we wish to integrate with that. And the Henry Review right now is trying to answer that question. And I think these are critical questions. They're not questions for even my tenure. They're questions for the next 10 or 15 years.
But what do you think you could offer policymakers that might get the next deal across the line?
Well, that's purely speculation because there's nothing to talk about, so that's not really on the cards.
But you must have a view on why the Singapore deal was knocked back and where the weaknesses in the ASX argument were and how you can plug those weaknesses?
I haven't spent a lot of time thinking about that, to be honest, because it's not particularly relevant for my world right now.
All CEOs have a different view of the world. In a few years' time, how will the ASX be different under your reign than it was under Robert Elstern's?
Well, I think Robert ran an extraordinarily good business, and people have asked me whether, I've seen things that I didn't expect, and the answer is I haven't. I mean, this has been a very well-run business by Robert and the management team. It was also run in a different era, and I think the time we're now getting into is characterized by greater complexity, somewhat lower market growth, and greater levels of competition. And so we need to be very nimble and very quick on our feet, and I'd like to think that in the next couple of years you will see that come through.
Well, on the issue of being nimble and quick, Chi-X entered the market last year. You've already cut your fees, you're offering new products. Do you fear that when Chi-X really gets its act together that it will be a serious threat to your business?
I think it's too early to tell where that's going to land. The revenue in our business that's at risk is trading revenue, which is 6% of our group revenue. So while it's important to us, it is not the group. The group is much bigger than that. And that's good. It means we have a well-diversified earnings profile. The other thing as well is, well, that might put pressure on trading. It offers new opportunities. So in technical services, for example, we've seen very strong growth in the first half as we help customers operate in that new world of fragmented markets and high-speed trading. That gives new opportunities.
Elmer Funke Kupper, thank you very much for your time.
Thank you.